so yesterday was the first time I've seen it, and now premiums have crept for the first time in a very long time. And what I will tell you is that up until yesterday, I would tell you it was the best buying opportunity I've seen in my career, ever, where premiums were close to where they were most of my 34-year career with much lower spot prices. And the fundamentals that would make you want to do this, to me, I'm scratching my head. How do people not see what's happening? And why are they not completely afraid? Or do they believe that Bitcoin is all you need to protect yourself? And I'm not a Bitcoin basher. I'm not. I own one or two Bitcoin. You look at the other markets reaching all-time highs, it's on the back of amazing optimism and enthusiasm and, you could say, irrational exuberance. And yet gold is quietly reaching all-time highs on the heels of tremendously poor fundamentals. As people start to wake up to this, I think the potential for gold to go much higher is real.
In a world where the price of gold is shooting up like a rocket, Andy Schectman, the CEO at Miles Franklin Precious Metals, dives into why gold is the main character in this financial thriller. As the price of gold breaks new records, reaching levels that make your eyes pop, there's a side story that's just as gripping. The premiums, or the extra cost you pay over the gold's base price, are also taking off. Andy explains the rise in premiums as paying extra for a special edition of that sold-out game because it's in such high demand. This gold rush is driven by everyone from big-time investors to the giants of the banking world, all wanting a piece of the action. Now we'll show you more clips of Schectman, but first, hit the like button, smash the subscribe button, and turn on notifications, as those who watch our videos are better informed. Also, check our pinned comment for some massive sign-up bonuses.
So anyways, with sentiment in the toilet right now in precious metals, and, I was scanning over Twitter, and, you get these people that are saying, oh, well, your $12 move in gold, what good does that do you? Be careful spending all your $12 in one place. This was as gold was moving up $12, comparison to, Bitcoin defying logic, defying gravity. And these people who were making these comments weren't even born probably when I started in this industry, and realized that if you make 6 or 7% per year, you are a rock star. But let's just talk about it. So in the metals market, you have sentiment low. You have the mining industry upside down distressed and really kind of disconnected, if you will, from the price of gold and silver. Well, let's just focus on gold for a moment, where gold has been going straight up, and yet the mining shares have been horrible. The capital spending in that area is at unprecedented lows. And this is at a time when there's a massive amount of overwhelming levels, if you will, of debt worldwide, both publicly and with the governments. And when you talk about, there's been talk for years of peak gold. New discoveries are rare, and the quantity and quality of the reserves that are already there are beginning to deteriorate. And so when you see gold moving in this light, let's also remember that gold is now rising as bond prices are falling. This is another big deal, right? And because, for a long time, and this is a very significant development as far as I'm concerned, one that shouldn't be overlooked in any capacity, because for a long time, bond prices and gold have been positively correlated, where if the bond prices go up, interest rates go down, making gold more attractive, right? Because that's Gibson's paradox. Gibson's paradox is the inverse relationship between real interest rates, and we have to take the CPI as being legit when we know it's not, but let's just pretend it is. And as the price of bonds have been falling, interest rates have been rising. And now we see gold moving in that environment where, even in a real interest rate environment, a positive real interest rate environment, gold has done very well. And I think that's the market's way of saying that they see inflation being a bigger problem than the Fed is leading on to. And we've been saying that for a long time too. So I guess what I'm simply saying to you is that when you look at the other markets reaching all-time highs, it's on the back of amazing optimism and enthusiasm and you could say irrational exuberance. And yet gold is quietly reaching all-time highs on the heels of tremendously poor fundamentals that would only, I believe, add fuel to the fire as people start to wake up to this. I think the potential for gold to go much higher is real. I tell you that when you see the central banks buying as much as they have, something we've been very consistent in saying, when you see gold rising in the face of bond prices that are falling, meaning interest rates are rising, it's rising in a positive real interest rate environment. This is very big.
In today's market recap, global silver demand forecasted to rise to 1.2 billion ounces in 2024. Buoyed by strong industrial offtake, global silver demand is expected to hit 1.2 billion ounces in 2024, which, if achieved, would be the second highest level ever recorded. This amount would also be a new annual high for the industrial sector, according to analysis from the Silver Institute and precious metals consultancy Metals Focus. Costco's move into selling Silver Eagle coins to members is the latest move of the warehouse retailer to sell precious metals. It follows the company's entry into selling 1 ounce gold bars in early 2023. And by the end of the year, they had sold over $100 million worth of gold during the third quarter, according to company official. Silver has found the $22 level to be extraordinarily supported multiple times in the past. So it should not be a huge surprise to see that it has happened again. The $22 level for me is a major barrier that seemingly is very difficult to break through to the downside. And therefore, I think a lot of traders are just simply taking advantage of cheap silver when they see it. That being said, we are somewhat in the middle of the overall consolidation area that is between $22 on the bottom and $23.50 on the top. Now we'll show you more clip, but first, subscribe and turn on the notifications bell so you do not miss out on our daily videos, and check our pinned comment for some very special sign-up bonuses. Enjoy the video.
Allocation. So nobody owns it but the central banks, the most well-funded and well-informed traders. The industry has been left for dead with virtually nothing in exploration, and the mining shares are at their lowest level ever, disconnected from the price of gold. The fundamentals would say that this is something that shouldn't be reaching all-time highs, yet very quietly, as everyone is fixated on NVIDIA and on Bitcoin, gold is making all-time highs. Where does it go from here? I guess we will see. But I would tell you that I am very bullish ultimately as for where gold ultimately ends up, but I don't expect it to be a straight linear line. It never has been, but maybe, just maybe, I'll throw it out there, maybe this time it surprises us. We're up $130 or so over the last 2.5 trading days. That's not a trend, but it is the beginning of one, perhaps. Let's see where it brings us at the end of this week. And with a sustained rally, I think this is something that people should look at and understand that maybe this time it is different. Maybe this time it is different because of all of the things that we've talked about, whether it be the craziness here at home, the open borders, the election, the Justice Department, the lawlessness, the money printing, the craziness. Or maybe it has a lot to do with the weaponizing of the dollar, or the fact that our brain-dead Secretary of Treasury goes to Brazil in Russia's backyard, part of the BRICS, and says, we need to confiscate those assets, not just freeze them. We need to confiscate them. And the hubris, the idiocy, the flat out stupidity of the Secretary of Treasury telling the world in Brazil, a member of the BRICS, that we need to confiscate those assets, not just sanction them. We need to use it to rebuild the Ukraine. I mean, if that isn't a shot across the bow of the BRICS, if that doesn't cement the rallying cry, I don't know what does. So maybe this is the beginning. One of these days it will be. And it's the first time in, roughly since Thanksgiving. So you got December, January, February. So we're going on 3.5, 4 months, maybe even longer, where actually we can probably even go back to late summer, early fall, when the U.S. Mint dumped 4 million Silver Eagles on the market. For the last several months, maybe 6 months, that's been one of the things I've been consistent in saying as well. The contradictory nature of what I see happening on the upper levels with the mines and the mints and the big epicenters of metal being bled dry slowly and methodically, quietly, not to raise too much attention. The LBMA, the COMEX, even the Shanghai Exchange, the backdooring out of SLV and PSLV, and all of the ways in which we are seeing, even now with arbitrage, where Shanghai is listing the price higher in Shanghai than in London or in the United States. And these are sophisticated investors who have access to all of these platforms that are bleeding dry the exchanges at a period of time where this country's lost its flipping mind, at a period of time where the BRICS coalition is growing legitimacy and scope and size. And I wonder to myself, what am I missing? I mean, where is everyone? And maybe it's NVIDIA going to the moon. Maybe it's the bull crap that we get out of the Bureau of Labor Statistics and the talking heads that say, oh, it's a soft landing and inflation's under control, and all of this nonsense that have people anesthetized into believing that, this is the U.S., everything always finds its way to work itself out. At the same time, the biggest money in the world is telling us a different story. The most sophisticated, well-informed investors in the world, the central banks, are on a buying spree that the world's never seen. That ought to tell you right there. I mean, if that doesn't tell you, then you're not really understanding the way that this works, that the big money is always 2, 3, 4, 5 steps ahead of the public, and they do it when no one else is looking in that direction. That's how they position themselves, and do so in a manner that allows them to achieve their goals. They have all the money, they control the media, they control the narrative, they control the markets. All of these things aids their ability to reposition. And I'm wondering, where is the public? Well, yesterday would be the first time that I've noticed a change. And we've had some very large orders recently, and those large orders have dried up a lot of all of the excess product that we have that is not 2024.
What do you think of today's show? Will gold massively surge as the BRICS master plan continues? Will Bitcoin crash? Post in the comments section down below your opinions. Thanks for watching the video till the end, and watch this one because you'll love it. I see you on the other side.